All right, everyone, welcome back to another episode of our Crypto Talk. Today's one a little different. It's not just about what's trending, it's about what's really going down in the market right now. I'm joined with my brother and co founder Sahil, and we've got someone who needs no intro. If you spent more than 5 minutes on CryptoX, the crypto professor is in the house. And we're talking trade wars, the future of the 4 year cycle, RWAs versus AI, market survival strategies, and a lot more. So, it's one of those episodes where we're not just here to hype, we're here to think a lot deeper. So let's get into it. So, welcome, Crypto Professor. How have you been today?
Thank you. Yeah, doing really good. Thank you.
All right. So, what do you think about the current state of the market and the trade war fallout, as they say?
Yeah, so I mean, being honest, I've been monitoring a lot of the data from historical cycles, and you always look for these black swan events. And I thought we'd be okay when Trump became the president. We obviously had the inauguration back in January, and there was a bit of a market shakeout then. But yeah, it's been very challenging as of late, and we can see what he's trying to do based on, he's obviously the president of the US. He wants the US economy to be as strong as it can be. That there's ultimately challenges with that, and the decisions he's making are impacting everybody on a global scale. But ultimately, he's working in the best interest of America. And the rest of the world really needs to kind of figure out what their positions are going to be with the trade wars, with the tariffs, how much they want to potentially give and take with Trump, whether or not he's potentially bluffing on a few things and whether he'll kind of pivot and kind of take as much as he possibly can, and then kind of draw back a little, or whether he's just going to go kind of bull in a china shop and ultimately push and push and push until something changes within the US as well. I don't know if you followed the news with Jerome Powell and the Fed cuts that we're expecting this year. Now we've seen that, you know, potentially looking at 3 or 4 rate cuts this year, because there's not really any reason that interest rates need to be as high as they are. But I think Jerome feels that he's being backed into a corner a little bit, and potentially not being given the freedom to make the kind of informed, rational decisions he would want, and more kind of reactive to the decisions that Trump's making. So that's probably my initial thoughts. Love to get your perspective as well on the tariffs and the trade wars and how you feel it's going.
Um, right now, this isn't just a trade dispute. This, comes across as more of an ego war between the two countries. And I was just going through X today, and you know, China actually fired back with 84%, tariff, and even blacklisted 4 or 5 US companies, big names like Sierra Nevada and other AI players as well. So if you see what Trump's doing with China, 3 separate tariffs, since coming back, started off with a 25%, then 34%, and now 104%. If you add them up, it goes to a 341% hike. So, you know, even, you've got people like Kevin O'Leary now calling for 400% tariffs. These people are just, throwing numbers around. Like, it's just, uh, you know, what do we
Yeah,
call it?
well,
So,
it's provocative behavior, isn't it? That they're trying to spark some sort of interest or discussion or dispute around kind of where those tariffs should lie and the impact it's going to have. It's quite interesting as well, because I'm based in the UK, and the UK are breathing a sigh of relief because they feel that they've been treated pretty fairly. But ultimately, we don't really export that much to the rest of the world. So, you can look to increase tariffs on the UK, but we don't really do much. We import a lot of products, and ultimately, therefore, we pay quite a lot to other countries, and not the other way around in terms of income that comes through. And even what we do export in terms of steelworks and things like that, since COVID, that has significantly decreased. So, the countries that are or have had the tariffs put on that are in the lower end, it's because they don't really export that much. So there's an interesting perspective in that sense as well. But ultimately, yeah, China and the US are in a power battle, and as I've said, I don't expect that that's going to settle anytime soon. I do think this is going to kind of press on probably until the end of April. It could potentially go into May, but because they're two huge powerhouses, it's obviously having a huge ripple effect on the rest of the market as well.
I think we came into the year expecting something of that sort. With Joe Biden, it was slow, but it was kind of steady. It was kind of consistent. We knew what to expect from him. But when Trump was elected, I think more or less everyone who knows how eccentric he is, how dynamic he is, as Ryan mentioned about Jerome, he likes to take informed decisions. Do we think the same about Trump? Personally, do we believe that he's someone who does his due diligence, as we say in the crypto world? I'm not very sure. Again, he's the president; he must be doing some research. But with Trump, I think we were more or less aware that we'll get some spice, but not this much of spice, especially with China, as the professor mentioned. When it comes to exports, I think it boils down to these two countries itself. It is China and it is the US. Russia not so much anymore, since they probably trade more with India or other countries since their Ukrainian invasion and whatnot. But as long as these major players keep on this boxing match of one hit after another, it, it will start affecting countries that are importing from China. And I think in today's world, everyone imports from China. We know in India, we import a lot of stuff from China, even though we're not in the best political terms. But when it comes to trade, we import a lot from China. So if they're being taxed upon, they will try to make it up somewhere else, if not the US. And then it will come down to the other countries, is what I feel. The global implications of these decisions, as I was reading on X as well, that this is not something that the White House wanted. They had expected it to be more easily done, but China in 2025, I don't think it is the China of 1995 or even 2005. They know their worth in today's world, and now they are again fair play to both the countries. They're fighting back for what is best for their particular economies.
Yeah, I would agree with that. And as mentioned, that this is where it'll have that ripple effect. Whether the costs come down to India, whether the costs are placed on Europe, South America, ultimately everybody else is going to pay the price. But it goes back to what I initially said, that Trump is the president of the US and he's looking out for the US interests. So it's kind of hard to be critical of him for that, in terms of that perspective. Yes, it's not necessarily advantageous for the rest of the world, or at least short term for the stock markets, the crypto markets, but he is trying to basically bring the US into the glory years that they had in the 70s and the 80s and the 90s that they haven't seen in a while. So it is one of those.
So yeah, let us move forward. Let us make this discussion a little more about our domain in the crypto industry. So as uh, should we consider it dead now? What do you think, Ryan? Is it over? Is it a myth? Was it always a myth that we had hyped up and it never really existed? What do you believe with institutional plays, everything that has happened in 24, late 24 and early 2025? What do you think about this 4 year cycle that we've always believed existed?
Yeah, so I mean, I look back at 8 years of data back in December when Ethereum was starting to flag to try to determine exactly where the pinch points were in previous cycles, the types of declines we saw, whether it was kind of day to day, week to week, month to month, to really figure out whether there was opportunities to basically exit, look to enter again at certain points of the cycle, and I I carried on looking at the kind of the bigger altcoins as well. So the likes of Cardano, the likes of ICP that had completely crashed in the last bull run as well, just to kind of see whether or not that had any kickback. And ultimately, the data is yeah, it's got no value for what we've seen, certainly over the last few months. You've talked about institutional players getting involved. That should have brought much stronger foundations to the market. I didn't expect there to be as significant swings, particularly when we look at Bitcoin at the moment, 109,000 all the way back down to 76,000, and people are calling for 70k, they're calling for 60k, some people are calling for 40k. And I'm looking at the charts, and I can understand their logic based on previous percentage decreases, in insignificant black swan events or turmoil, and this would be one of those with the tariff and trade wars. But we do have to acknowledge that there has been billions pumped in through these institutions, particularly through the ETFs. And I just suspect that there should be a higher floor. There should be a point in which people are just not going to sell. That there's only so many retailers that hold these tokens because the institutions have swallowed so much up. The likes of Michael Saylor, he recently bought another 2 billion worth of Bitcoin. I think it was around 86,000. So he's DCAing at 86,000, and we're currently sitting at 76,000 now, and he's probably planning to buy more. I've heard recently that these trade wars and the tariffs are bringing the US around 2 billion daily in US dollar. Is that going to be used to buy Bitcoin? Nobody really knows. I know during the initial discussions around the strategic reserve that the US holds around 200,000 Bitcoin, and they weren't necessarily planning to buy any more. But they do have Saylor looking to spearhead that as well, because he wants the US to own anywhere between 5 and 25% of the total supply. So I think the 4-year cycle has gone. I'll be honest. I look at the global liquidity index, and you kind of look to monitor through those sorts of cycles. But a lot of people are saying that they feel the bull run has been pushed 6 months, which would ultimately make it a 4.5 or 5-year cycle, depending on how you want to look at it. But they don't expect that it's going to kind of fit back into this narrative. Nobody really is expecting that this bull run is anywhere near over yet. That they're expecting that Bitcoin is going to have that, euphoria moment, whether it goes up to 150,000, 200,000, 250,000. That's obviously going to be quite a lot of speculation, but yeah, the 4-year cycle, I do unfortunately think isn't a thing anymore, or it certainly isn't based on the data. So yeah, that's my initial thoughts on that.
I'd like to add on to that. The 4-year cycle, what I feel is like a bit different to what Ryan said. I think the 4-year cycle still exists, but it's kind of evolving with everything that's going around, because it's not that clean anymore. We've got rate noise, we've got elections, ETFs, and tariffs, liquidity rotations all laid in now, and so I feel it's not very simple, that halving to euphoria playbook we had in 2017 or even in 2021. And if you look at the data, it shows the shift that Bitcoin's 4-year CAGR is now down to 8%, which is the lowest ever. And what I know is that used to be the core metric everyone, pointed to as proof of cycle strength. And at the same time, the 2024 halving, it did happen. And since then, the price is still up by 20-25%, I guess. But institutions are, obviously driving interest just in Bitcoin for the moment. But the move actually, feels more like a, a long-term thing than just a breakout. So yeah, I feel, 2025 still has a lot to offer, but I don't feel actually it will be a dopamine driven or, uh, a meme fueled run this time around. It will be more mature, slower to start, but let's see. I just hope that it happens and it's more sustainable, because uh, I feel when it's not just retail in there, you have the suits. So let's see. Like, we can all just, you know, keep guessing. It's just speculation all around. So
Yeah,
what do
I
you
think
think?
the biggest kind of shock to me is probably been Ethereum, which it probably has to most people, just because they've had that ETF, they've had billions in inflows, they've had that institutional adoption, and the price has literally just tanked. I think people would have been surprised if Ethereum went back to $2,000. But to end up, where is it now? Is it 1450?
40.
It's really low. But yeah, I'd love to get your thoughts as well, Sahil.
Having the Coinbase wallet notifications from like the last 2 days that ETH is down 6%, 7%. So not a good time to see these notifications.
I remember this. This was a genuine conversation a few years ago, the flippening. And now, if someone mentions the flippening, it might be Solana flippening Ethereum or BNB flippening Ethereum. Ethereum is never going to flip Bitcoin. I don't believe that is going to happen anymore. And the fact that we were seriously considering, and not we, I mean, by we mean the crypto industry was seriously considering that, okay, maybe this decentralized internet, Web3, and the market leader and the innovator, Ethereum, will probably trump, not Donald, but probably trump Bitcoin someday. That was a genuine thing that we were considering a couple of years ago. And now the the Bitcoin dominance in the total market cap, that is absolutely astounding. And when we talk about the 4 year cycle, I think Bitcoin, everyone sitting here, all three of us, I think all three of us would agree Bitcoin is in a place, as Ryan mentioned, the floor will be much higher than last time. It is not gonna drop to 16K no matter who says what. BlackRock and Michael Saylor, now even more institutions, even uh, the World Liberty Finance, all these institutions, I don't think they're going to let Bitcoin fall to that place. Bitcoin has that sense of security. It has that sense of uh, uh, high level people, high level uh, uh, investors in it to sustain the price. But when it comes to Ethereum and eventually what Ethereum does still affects all the odds. That is the truth of the matter right now. Why have we not had a crazy altcoin season yet? Because Ethereum has not had a crazy altcoin season yet. Bitcoin has passed 69K, as Tanishq mentioned. Even right now, when the market is quote unquote bad, it is sitting 20-25% over the halving price. But what is Ethereum doing? Absolutely nothing. It was what, 800, 850 in the last bear run, and now it is 1400. That is not good at all. And that, I think, is the reason why the bulls, the 4 year cycle, according to me, has been completely obliterated, at least for altcoins. I don't think that alts have the strength right now because Ethereum does not have the strength to fight back. They are 10, 20, even the great best alt projects that we've covered over the last 2, 3 years. Great teams, great utility. But again, if there's no money in the market other than Bitcoin, what else is there to do for them?
I think as well, the challenge is that when we look at this 4 year cycle, we base it off things like the Bitcoin halving. We base it off the US presidential elections. We expect that the stock markets are going to boom. We expect that employment data is going to be good. And I think that really is, they are the two key things that are holding us to this 4 year cycle, because that's kind of how the macroeconomic climate has worked as well. And we may fall back into it at some point, but I do think we need to be more open-minded. The cycle. I mean, even last year, January to March last year was very strong, much stronger than most of us probably would have anticipated. But then it flatlined in May. It was very bad up until pretty much the election, and things had that peak for 3 months. So we may fluctuate between this kind of 3 to 5 year scope, which hinges around a 4 year cycle. But I just think there's going to be a lot more flexibility around when people should be kind of looking to get in and out of the markets, or potentially look at the opportunities to buy or sell based on, the wider economic climates and what's happening around the world, rather than just US elections or Bitcoin halving cycles these days.
So yeah, I mean, the cycle's shifting and the macro is getting messier. What actually is driving conviction right now? I mean, because it feels like either, apart from Bitcoin, obviously, everyone's either talking RWAs or AI. So I feel it's high time we finally settle it, which one actually has legs. So what do you guys feel? Team RWA, team AI, or both?
It's interesting. I'm very strong on real world asset plays, mainly because they have tangible assets, they have real yield opportunities. And there's a lot of scope in this market. As soon as the regulation is resolved and people are able to onboard the kind of the Web 2 environments or the companies and businesses that they're looking to partner with, we're already seeing Ondo make some big moves. We're seeing XRP make some big moves as well. They had a recent acquisition for 1.2 billion, and they are tapping into these banking institutions and industries that is really going to elevate them to another level. And people being able to access these services in a decentralized manner is going to bring, we're not talking billions in capital, we're talking trillions in capital. People can tap into these services across the world if the regulations enable them to do so. And they don't necessarily have to do it through the use of banks as well. Whether individuals are debanked or unbanked for various different reasons, they can still look to tap into these services. And that's a huge market. I continuously go on about the fact that there's over 1 billion people in the world that are either debanked or unbanked. They are people that have not been able to tap into these services. So, if they have the capital to do so, they also have the opportunity now because it's a lot more equitable. And interestingly, you mentioned the AI narrative. It's obviously huge, particularly with AI agents and not necessarily the machine learning models, but the deep learning models that really are pioneering what AI is able to do and offer to people in terms of services. I do think there's a lot of tokens that shouldn't be tokens. There's a lot of AI agents that should act just as AI agents with subscription models, and your standard format of paid subscriptions. There's a lot of tokens that have been used to generate capital to promote the projects and develop them, which is ultimately a fundraising effort. But I go back and raise the same question again and again with AI agents: is why does it actually need a token? And a lot of the time, it falls short on that question alone, which causes me challenges with investments. But saying that, there are AI models as well that are now looking at staking revenue and real yield. And again, they're models that are profitable. And when you bring in those revenue staking mechanics into it, and you can demonstrate that the company or the project is profitable, and again, there's tangible rewards at the end of every month that isn't specific to the token itself, but it's US dollars or the stablecoin equivalent, then that presents a lot of opportunity. But for me, the real world asset narrative, I think, is going to be absolutely huge. I think we are literally just scratching the surface with that at the moment.
Yeah, I mean, if I've got to pick one narrative to actually, run with for the long haul, I'll back RWAs as well, because I mean, yes, AI is obviously huge, but like you mentioned, most AI plus crypto projects still feels like just people are just plugging GPT into a UI and they've launched a token. So except for a few other projects, the big ones, obviously. But RWAs, on the other hand, I feel they're actually, solving something real. Tokenized T-bills, equity on-chain, global access to yield, and so on and so forth. Permissionless lendings. So, like you mentioned, there's Ondo, there's Algorand, there's Plume Finance, there's PropBase. These are serious players who could actually, tapping into actual demand and not just the hype. And I mean, yes, AI is actually good to people. People like reading talking AI because of Mid Journey, Chat GPT, the Ghiblis. So, but I feel RWAs are the real ones, actually building pipes into traditional finance. And uh, like you mentioned, that's a much bigger deal in the long run. So,
Absolutely. I think one of the smaller plays that I'm involved in is crypto autos, and that's automotive industry. And it's the market caps really that don't make a lot of sense. I think even crypto autos at the moment, I think, is sitting at around a 5 mil market cap, but they've just invested into a $20 million rental fleet in Dubai that people can earn real yield off. So, the value proposition is there if you take a deeper look into those tokens, but it's that sort of narrative. People can see the cars, they can hire the cars. It's the same with prop base that you've noticed. It's specific property developments, whether it's rental yields, whether it's opportunities to flip the properties and make profits. I think that is what certainly a lot of retail investors that are coming into the space, they're looking for more lucrative opportunities that don't offer these kind of 3, 5, 7, or 9% profit zones per year. They're looking for the 15, the 20, the 25%. They're not as generate as a lot of the crypto space, where people are looking for 10x or 50x or 100x. They're just looking to put substantial amounts of money, 7 or 8 figures, to make consistent profits in projects that have the structure and the business models to do so. And I think that's where the opportunity is. So
Yeah, I mean, I agree with you with the crypto autos, like you mentioned, right? The luxury, the cars, and all. So yes, I was actually going through a lot of e-commerce and RWAs combined, and I saw 5 to 6 projects. Like I wasn't aware about that. So that's a whole another space, uh, diving into. And like you mentioned, 15, 16, 20 bare minimum. People want to actually sit back, stake their tokens, and get some money in. So the yields are good out there with prop base, and like you mentioned, other other people at point. So what do you think, Sahil? Like, what is
Yeah, I'd like to make it three people in team RWA, and that is mostly because of the fact that Ryan also mentioned. With all due respect to the good AI projects, I have been asking this question, and even in our previous conversations, Tanishq, on the show, even outside the show, I keep on asking the same question. If you are an AI service, why are you having a token that is not doing anything, adding nothing to what you're giving to the users? And to be very honest, from what I've seen with AI tokens, most of them, again, not every one of them, most of them, they're trying to play a hype where there is a very big player in the Web2 world, and not just one player, but there are 4 or 5 players. I think everyone, Microsoft has their own AI. OpenAI obviously has their own AI. Grok is there. There's Gemini. These are trillion-dollar companies investing everything into AI, right? And now, with all due respect, again, we are from the crypto industry. It is difficult to compete. It is very difficult to compete in such an industry. But when it comes to RWAs, it is where our specialties lie, don't it? Like blockchain and tokenization, and especially when there are assets, there are tangible assets that people can see, people can uh, touch in a way. And I think that is where blockchain technology and decentralization and tokenization really shine. We are playing in our own on our own ground, on our own field, and I think that is why I have to incline more towards RWAs. And as you mentioned, there are great products all over the place. There are real estate products. There are treasury, investing into treasuries, investing into luxury items, investing into art, and these are things that people can only do with crypto and blockchain. AI is something which I believe people can do without Web 2. People are doing without Web 3 for a long time. And that is why I think I'll have to agree with both of you and be team RWA for now.
great, awesome. I mean, 3 on 3, not bad. So narratives aside, this market is, not just about big ideas, but it's about what you do. And so let's talk about strategy when everything's messed up. What's the actual play here, guys? What are we gonna do?
it's tricky, isn't it? Because you obviously, if you're into altcoins, you're probably down quite heavy at the moment. I think every single altcoin, other than, let's rule out Bitcoin, Ethereum, and Ripple, that's had an incredible run. I think every single, and maybe Mantra as well. Mantra's up about 10,000% for the year, which is just absolutely crazy. Well done to anybody that got into that early. But pretty much most altcoins are down between 70 and 99%, and that is just a fact in the last year alone. We're not going back to previous cycle all-time highs. We're just talking the past 12 months, and a lot of them probably the past 3 months. So ultimately, there's decisions as to whether you feel that the team are building, whether you feel that there's value proposition based on what you see in other tokens. There may be opportunities to rotate, and you really have to look ahead over the next 6 to 12 months to see what those narratives are going to be, what the teams have executed, if they've got any specific partnerships, if they feel that the product fit is going to resonate more with communities, and ultimately, people will start to see that some of these tokens will move quite quickly. They are so coiled up and suppressed at the moment that we will see altcoins do 100%, 200%, 500% within the space of 24 hours to a week. And they're the types of projects that are going to capture people's attention. Do the projects have enough runway for the next 6 months? Are they spending or marketing in a I guess logical manner, and not just wasting capital? Did they look desperate? Did they look calm? So that there's a lot that goes into kind of the thought process around which tokens may hold value. We'd spoken about RWAs. I really can't see that narrative failing. So as long as the projects are doing what they say they're doing, they're keeping to their roadmaps, and there's opportunities with the regulations and things like that, then I think there's a huge opportunity there. If people have stable coins to DCA, this is the point in the market I probably would be DCAing more. There's been a lot of memes about buying the dip and
Buying the
the next dip, and I think we've probably had about 10 or 15 dips at this point. I was all dipped out at about dip 4. I'm not going to sit here and tell you that I've got stable coins sitting on the side, and if you see that on social media and people are saying they've got 6 figures to deploy, I would be questioning what they've been doing for the last 12 months, because they certainly haven't been involved in the space. But fresh retailers coming in at this point, yeah, they have genuine opportunity to do 100x. So it's just whether or not they have the risk appetite to get involved at this point when the markets just look as though they're falling apart and going to zero. So yeah, that's my thoughts.
I don't think I'd be in a position. I think in 2021, was it, Tanishq, when we used to discuss crypto, even with the retail, like even with our parents, even with our uncles and aunties, everyone was involved in crypto back in 2021 when Bitcoin and the Ethereum really, really pumped. And I think that has been a real problem. I've been discussing that over on YouTube, also on my newsletter, that we have not had a whole new set of fresh retail in this cycle so far. That is an issue, right? And right now, the conditions of the markets, I think people are talking about crypto. I've had a couple of calls about crypto in the last a month or so, but they haven't been pleasant. They've been quite, uh, quite mismarketing. What is the term? I don't know. Bad marketing about crypto. But again, as Ryan mentioned, if there is someone who has the appetite to take a risk right now, I think uh, now is the time. But again, just like Ryan, I don't think there are a lot of people, especially who have been following the markets, who have been following projects, that have any stable coins left to go into another dip. We already are dipped out, and hopefully, if someone new enters and they make a lot of money, good for them, especially with the altcoins.
Yeah, true. I mean, what are we gonna buy the dip with? And obviously, what I feel is that the entire pump.fund saga actually messed this cycle up real bad. Because I remember you talked about 2021, because we actually were enticed with Dogecoin. I saw an Instagram post about Dogecoin, and that was the kind of retail followed up into crypto. A lot of people got into crypto because of Dogecoin. I remember back in 21, but then this year you have how many 100 thousands of meme coins, and like every day there's a new meme coin, and that didn't land well with the retail. And I still feel there should have been a larger utility season rather than the pump.fun scene. So it could have been better, but it is what it is. And yes, for this current moment, the only thing people can do is actually DCA, and if there's the money left, obviously. And uh, you guys know how to survive the chop, because most of them are dipped out, and what they're doing is that just converting their altcoins, selling them off for a loss, and just converting it into stables, or maybe mid and large caps, which are not that volatile. So that's also a good strategy to actually save your capital before it's just vanished, because like Ryan mentioned, most of the projects have stopped updating people with what's going on, and that's going to happen. That's very natural. People will go off, people will just stop updating their community, and obviously most of them would have just to run out with the runway, and they've stopped marketing stuff like that. So that's natural. That's crypto. So I just say, if you have the money, start DCing. Uh, Only after Sailor buys his next set of Bitcoin, because he hasn't bought for a week, I guess. I mean, that's surprising. So maybe he's looking for better prices. So yeah, that's more or less what I had to say for this thing.
Yeah.
And
I just yes, please go on. Sorry.
no, no, go on. Okay.
No, no, I was talking about something different. I had a chat. I just remember with Ryan about Kaito, and I personally wasn't involved with it anyhow, but I saw a lot of people getting involved. I saw a lot of hype all over CryptoX. Maybe not with the traditional KOLs, but all the people around marketing and all the important voices in the industry talking about it. Would love to know more about you, because I know you're involved and I know you have a lot of knowledge about the ecosystem. Would love to know more about it.
Yeah, so Kaito is very interesting. If we think of the kind of previous airdrop campaigns that projects do, they focus on the likes of Zeely campaigns, Galax campaigns, and ultimately there's a lot of low quality metric farming that doesn't add long term sustainable value to a project, or certainly doesn't educate the community on kind of various different aspects. And this is really where Kaito kind of pivots that, where projects can now get involved with offering community members rewards for ranking on Kaito's leaderboards based on algorithmic data that basically determines how valuable the contributions are on social media in a marketing slash informative slash educational engagement capacity. And depending on what projects want to reward individuals for. So the likes of Mantle, for example, they're offering 150,000 Mantle tokens over the next 3 months to the top 50 individuals on the leaderboards, which is a huge opportunity for people on a global scale. But what it forces them to do is to learn the content, to engage with the relevant individuals that are linked to that project. So, whether that's the Mantle team, whether it's potentially influencers that are on board or marketing services that are on board, but it creates this mind hive ecosystem where educational content is shared and pushed as far as it possibly can be. And it's quite a unique approach to marketing I haven't really seen in this space, and that there's clearly value in it. Because there's a lot of people that follow various different accounts, and when you're connecting this hive mind up, you're likely to see a lot more information around Mantle on your feed. And we know that individuals usually have to see things around 7 times to actually make a purchase. That's just kind of standard consumer data. But ultimately, they're changing the way that I guess airdrop campaigns are run that adds a lot more value to projects. So although it's still in its infancy, I can see Kaito being quite a significant social finance slash, I guess, information finance project. Certainly over the course of this bull run, I fully suspect there'll be a lot of projects that will be looking to get voted onto their platform to get communities involved. So it's definitely one to watch out for. And as you said, it's one that I've started to engage with quite a bit. There's quite a lot of layer 1s and layer 2s on there. So, I'm educating myself as much as I'm educating my audience. There's various different bits of terminology that blockchains use that other blockchains won't. And that technical kind of barrier needs to be broken down into language that people can understand as well. So yeah, that's my thoughts on Kaito, but very, very interesting social experiment at the moment.
I mean, yeah, Kaito's launch was a big one this year. I guess Kaito and there was Beta Chain people were actually excited about for this year. So, yeah, I also saw many posts actually, yapping and getting Kaito points and something like that. Marketing campaign, it was actually a huge success, because on my timeline is actually very different to that, but the personal one. But I actually saw a lot of informative posts, like Ryan mentioned. So that's actually a good way to go around with that. So I guess we can also look into the ecosystem Kaito is sooner rather than later in depth. So yeah, Sahil, you were saying?
No, I was just mentioning that I remember when the Kaito hype in very, very, very initial days, I tried to sign up with Kaito, but we were Tanishq, by the way, flagged off because we're a brand account and not a person account. So I think that is why we never looked into it much. But yeah, definitely something very interesting, as Ryan mentioned. And again, if not as an account ourselves, but definitely if we can educate our readers and viewers on that, that would be good for at least them, if not us directly.
Yeah, right. I mean, moving on, finally, the question that always comes up, no matter where we are in the cycle, what's your Bitcoin bottom, guys? And what's your top? So let's put some numbers on the board. So, Ryan, you can go first.
Honestly, I mean, I was surprised that we went under 80,000, just because of the institutional adoption. I'll be completely honest. I thought we may see a 25% pullback. I know we've had a lot higher in previous cycles, but for me, I really felt during the bull run it wouldn't drop below 80. So I'm already out with that. What are my thoughts now? I would be surprised if we went under 70k, just because of the amount of buy pressure that has been and there will be. I would be shocked if global powers do not want to get involved in Bitcoin at 70,000, because that is pre-election prices. That is, pre-Trump, strategic Bitcoin reserve. That was before Saylor pumped probably another 10 billion into it. There's significantly higher numbers of people that want to be holding Bitcoin as a store of value. So I'd be surprised if it goes under 70,000.
All right, Sahil, what's your bottom?
Bottom.
Bitcoin.
I'm on the same boat as Ryan. I did not expect us falling below 80k at all. And when I mean at all, I was like, I could have sworn my properties on it that it won't fall under 80k, but it did. So now I just for the sake of it, I'm gonna say 69k because it was the high last time out. But as Ryan mentioned, it would be very, very surprising if people do not eat Bitcoin up. People, not literal people, but institutions, countries, and big players. If they do not buy it up at 70k, I'll be blown out of my mind. So my bottom will be 69k, just to be different from Ryan, and because it was the top in the last cycle. What about you, Tanishq? What's your bottom now?
I mean, if we're talking bottom, so let me go a bit lower now if the stakes are so low. So,
That's not a compulsion.
I mean, yeah, I feel what I'm seeing, like as of today, the macro is actually dragging us down. And if we get a Fed surprise, I won't be shocked to see a Bitcoin retest around maybe 52k. I mean, I don't want it, but if it happens, I won't be shocked at this point, because, like Ryan mentioned, I couldn't see it. Like the both of you mentioned, I wasn't actually expecting it to go under 80 and now under 75. And now in a few days, if we have a 400% tariff, 400% tariff, so we could actually see it go below 70k as well. I mean, this. But then again, you have the Bitcoin strategic reserve and stuff like that. But yeah, today I read a post that a potential World Liberty Financial linked wallet dumped over 5,400 Ethereum at $1,465. I'm not sure how true it is, because uh, that was a massive news today. I mean, if Trump is actually selling at a loss, and I I don't know, that's nearly a 200 million bet, excited at massive loss. And I don't know, that's my bottom, maybe 52k.
Let us just discuss top, then end it on a cheerful note.
Yeah, my top, I'm gonna go for 160,000. I think it probably has another kind of 50% juice from the top that has already had this cycle. I know people are pushing for 200k, 250k. Some people quoting 500,000. I just simply can't see it. I think we've reached a point now where Bitcoin is already at a crazy price when we compare it to the last 8 years, and I think the top would be around 160,000 if we have a good run.
Tanishq, what about you? What's your top for 2025?
I think we should keep the same cycle. You go second.
So I'll go first. Okay. Okay. I'll go for 135k. It would have been much higher if I hadn't seen two global powers just battling it out for the sake of it, but I'll still go 135K is my number.
Um, I mean, on the upside, I'm putting the top between 140 to 150K. And that's not just opium, that's flow based. We have ETF inflows and capital rotation out of struggling global equities at this point, and just the scarcity math. So let's see if it does happen.
I think people would be quite happy if any of these happen right now.
Yeah, absolutely. At this point, they'll take 120K.
I'll take 120K at this point.
I think that's like
I'll-
100K at this point, if I'm honest.
I mean, yeah. So, all right, guys, that's a wrap on this one. Big thanks to Crypto Professor for dropping insight after insight. Always sharp, always real, and of course, I'll bringing the balance like he always does. And if you're still wondering whether we're in a cycle, whether RWAs are just a trend or what to actually do in this market, I hope this gave you some clarity, some insights. And if it did, you know what to do. Drop us a comment, share it with someone stuck in the crypto limbo, and we'll catch you next week with another deep one. Stay sharp, stay in the game. Peace out.